Rick had some wonderful sage advice for everyone. And I was recently, this past week, listening to BBH. It's the only investment firm, banking firm, that it's all run by partners. And their best year ever was 2008. And they do a lot of custody work. And they said all their studies and research is you get rich on a handful of stocks. It's a very small group, but then you take money off and you diversify. You diversify into real estate, you diversify into art, you diversify into a index portfolio. But if you want to get rich in this space, you have to bet on a few key assets and a few key people. However, when you run a gold mutual fund, you have to have a minimum of 21 names. And out of 88 gold producers in the world, that's 88 gold producers, how do you find 21 great CEOs? I mean, that's the real challenge, I think, on the math that Rick was saying. It's very, very hard. And most great wealth experiences 50% corrections. Anyone that's been building a company, it goes from technology, it goes from media companies. I saw all this interesting data that sort of complement what Rick was saying. And you need the CEOs that can stomach it. And I remember one time when Ivanhoe was the pre-Indochina, was it, Rick? And I get a call from Robert Friedland, and it's 3 o'clock in the morning, and I'm sleeping, and he wakes me up, and I says, 3 o'clock in the morning, and he says, money never sleeps. He said, my stock is trading below its cash value per share, and it's being dumped out because of stupid people, this, and you want to go buy it, you can pay, it's worth $1 in cash, and it's trading at 75 cents, we have all these assets, all free. That's just the guy with 2 telephones. And so you end up betting on these jockeys, and it's the ability to overcome difficulties, setbacks, challenges, disappointments, and at the same time have a personal life, have a family life, and go and build something, and then have all these shareholders believing you, and there's very few. That's just the reality of it, and we have to go and try to speculate. And I hope that today that you'll learn some companies that we've made bets on, and they've done a phenomenal job in dealing with adversity and challenges and difficulty. And so I'd like to first come up with Paul to come up and speak with Klondex. Come on up. Come on for a second. Come on up. So everyone can see you. I want to make sure everyone can see you.
Yeah, thanks.
So here's a guy that hits the ball of the park, great numbers, spectacular numbers, and all because he gets caught in the crosswires of GDXJ, unwinding positions because of the success of this ETF, and his stock gets punished. $5 billion, I mentioned yesterday, went to GDXJ last year, and all of a sudden they own more than 20 companies of 20%, and they have to unwind all these positions, and they're blowing out $3 billion of gold stocks. That has this incredible rippling effect on high-quality companies. And we've made a substantial bet, and Paul has delivered. He's just delivered for us, and he's outperformed the GDX and GDXJ. And I was just briefly give you your story, sort of genesis for the people who appreciate it, because I think a lot of people here do not know the Klondex story.
Yeah, no, I was a hockey player, but not a running back. So I am from Timmins, actually, so I'm a third-generation miner. We started off Klondex here with the Fire Creek asset in Nevada. I had worked 12 years in Nevada for Newmont and for another company operating 2 narrow vein mines. We had a very unique opportunity when we began Klondex. It was a difficult time, very difficult to raise money, but we had some good shareholders that followed us along the way. We started up Fire Creek. It was our single asset. It's one of the highest gold grade mines on the planet currently being mined. The grade has been averaging between 27 to 33 gram head grade into the mill. We quickly acquired the Midas mine owned by Newmont because we needed a mill real badly. And then within 4 years, we consolidated 3 mines in northern Nevada. We went from an exploration company with a lot higher risk to close to a mid-tier producer. We're producing about 225,000 ounces this year, gold equivalent ounces, and consolidating those 3 assets in northern Nevada was key. 3 mines, 1 central mill, tremendous amount of synergies. And I was fortunate enough throughout my career to work at 2 of the mines as a general manager. So I know the other 2 assets quite well. I'm very familiar with narrow vein mining. I was a miner for 10 years of my career. I didn't go to college till I was 30 years old. Now 46 years old and run Klondex, which is a great opportunity right now because of what's happened with the GDXJ. Actually, we've had a tremendous turmoil. We've ran into a tremendous amount of headwind. The stock's done exactly what Rick Rule was talking about, what Frank's talking about. It's run up to about 750 Canadian. It's down to about 420 US, right, or Canadian. One of the best opportunities to buy the company yet, because fundamentally, nothing has changed in the company. In fact, the company is healthier today than it was when it was 750. Our company has less risk, better operations, and we're almost in the final phase of putting 2 other operations into production with an asset in Canada and that 3rd mine in Nevada. So what's very interesting, Frank, is that because of our success, we went up, we got added to these indexes, but now because of the rebalance, we're seeing a lot of selling off of that index, and it's really causing us a tremendous amount of harm. And in our case, we had another unique situation as a result of our success, actually. Because we have more shareholders in the US, we had to change our accounting principles. So we went from IFRS, which is what most people report in, to US GAAP. And I'll tell you, if you don't have to do it, try to avoid it. It was painful for us, and it's still painful for us. We report in different metrics, so we're going to have to start reporting some non-GAAP measurements so that we can compare apples to apples with the rest of the industry. It's not a simple metric. And because we started reporting that this year, coupled with the GDXJ, we've seen a lot of selling in the stock. Fortunately, we have good liquidity, so people who want to get in can get out whenever they want. But at these prices, you're not going to see these kinds of discounts for a long time with Klondex, especially because we keep doing what we said we'd do. We keep delivering on our promises. If you look at the history of Klondex, quarter after quarter, we've done what we said we'd do, and this year will be no different. We are planning to do 225,000 ounces, and we'll get there, Frank.
Talking about great people, Rick and I were celebrating last week with Pierre Lassonde's party, and for his 70th, and he jumps around like a bunny rabbit, like he's 50. And what's amazing is when we first heard about the story, I called Pierre, and Pierre automatically said, "Oh, he's the best. He's just fantastic," and they have a royalty on your assets.
Yeah, they certainly do, and
they own the Snyder mine.
They did own the Ken Snyder mine. That's where I met Pierre Lassonde because I spoke French, so relationships are very important, actually. So I met him. Back then, he invested strongly, him and David Harkwell, in the company, as you did in the earlier years. And yeah, he still has a royalty today.
So it's about people, and there's just a small handful of quality people like Rick was trying to comment on. And I think it's so important to recognize all this adversity and build it. And it's just great to see a Canadian from Timmins.
Exactly, yeah. Bad hockey player. That's why I went underground.
Michael, you want to tell the story on the Gran Colombia, the turnaround?
Yeah, sure. Thanks, Frank. So when Frank talks about adversity, Gran Colombia certainly has had its share of that, going back 2014, 2015, when we ended up in a debt restructuring situation. Spent a lot of time trying to negotiate with the various investor groups in our different listed securities. Successfully came out of that with the support of our holders who felt that long-term Gran Colombia deserved more time, had high-quality assets in Colombia. We are currently the largest underground gold producer, and I know Ian's going to give us a run for the money on that title. But we did 150,000 ounces last year with an all-in cost of $850 an ounce, generating $66 million of EBITDA. So we really turned the company around in 2016, 2017. We're continuing along. We've got a target this year of 150 to 160,000 ounces. We're currently on track with that. Our all-in cost will remain under 900. And the real catalyst for change has been shifting our focus to the cash we generate. Some we invest in the ground, and a large part of it is going back to repay that debt. So establishing discipline within the operations that they can't have all the cash, so let's allocate it properly to where we can grow this company properly. And the balance has to go back to starting to take the money off the balance sheet and prune the debt level back down. We do have currently 3 listed securities, common shares, that, as everybody in this cycle says, are undervalued. But we think the 2020 senior secured debentures we have, they pay a 6% coupon. They pay it monthly. so great for funds to hold. We think that's a very attractive investment for people because it gives them a 6% return out of the cash flow of the company while they're waiting for the share price to improve, and then the optionality of being able to convert to shares. And later this week, $47 million of that debt will be converted into 2024 debentures and start trading on the exchange as we've extended that debt successfully. And that'll pay an 8% coupon monthly to those that invest in that product. So we think we've got a really good opportunity for investors, not through just the common, but through those listed debentures to get paid out of our cash flow every month and get a good return. But it's discipline, 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 and sticking to strategy, which has proved to us to be very important in the last 18 months.
I've noticed that Michael has fingernails again. So 18 months ago, I went to see him, he had no fingernails. So he was sweating it, and he just persevered through it. And now Ian is an accountant with tremendous experience from Kazakhstan, worked for Lucas Lundin for a while. He's done other adventures. He's a serial venture capitalist. And when he was creating this mine, this operation in Colombia, he put up cameras to show everyone that every week you would get an email and it would show you exactly the development where your money was going. And that was very, very supportive because there was always a skepticism over Colombia because it was going through so many difficult times. And so I think he's done a remarkable job of starting up his mine. So why don't you tell your story also where I gave you a color.
Thanks, Frank. 5 years ago, I had hair, never mind fingernails. So when we founded this company 5-6 years ago, we looked around the world. What countries with a lack of competition but amazing geological potential? And Colombia was top of that list. So we went to Colombia and then scoured Colombia looking for what had the scale that we needed to get where we wanted to be in a public company. And then over 5 years, delivered every year on what we said we would do, from an initial resource to a larger resource to a PEA to a feasibility study. And then we didn't have the benefit of a grandfathered environmental license, so we were the first to go through the process of a modern environmental license in Colombia, which it actually took a year. So a year is a lot better than you would get in most places of the world. So I think from Colombia, there are issues in Colombia, but a lot of it is a misconception. It is definitely possible to work there, and we've had support from every level of government the whole time we have been there. So we, after getting the feasibility study and the permit, we had to finance this mine at the bottom of the market, which was challenging. But once financed, that is the time to build a mine. So we had the A-team from the engineering firms. We didn't have any lead times in our long lead items. Everyone was eager to get going. So we built the plant on time at the end of last year, and now we're currently in ramp up. So this is going to be our first quarter of production, and going into Q2 we should have full scale of production.
That's great. Now, Paul, when you deal with this thing of accounting, is there any factors? Because yesterday we were chatting that in our simple quant model that we have found that if the revenue for the last quarter is above the average for the 4 quarters and is sold off, they come back. It is when the last quarter is below the 4 quarters and there's something negative for news that these stocks take a long time to come back. It's the momentum of fundamental analysis. And the same thing for when you do gap analysis, it does. So when we take all this data and we drop it into our computer systems, and if we use Bloomberg, we get a complete different set of stocks to buy versus using FactSet. Why is that? And if you use IBD's Wanda system, it gives you another complete different basket of stocks. So you may think your Betty Crocker cake mix is going to give you chocolate cake and it's coming with vanilla, but it tastes cherry. It's recognizing that there can be lots of opportunity when you go from IFS or whatever these changes are. So the operative word to look for is free cash flow. And it's very hard to play games on revenue, so that's a top line item. That's pure, and that momentum is so important. And the free cash flow is free cash flow no matter what accounting system. And so I think that was the big opportunity to tell your story from the financial world. And what were your comments?
So there's a couple of points on that. So just some of the metrics we were talking about with those algorithms, One of them is EPS. So even last year, as we were reporting through IFRS, we were well on track to do a target of 18 cents for the year, Frank. And as we had to close the year in US GAAP, rather than reporting in IFRS, about a 19-cent is where we should have been for the year. Actually, that's exactly where we were. Unfortunately, we had to report in the different metrics, so it was a negative 2 cents. Right there with the algorithms, rather than doing 18 cents, which was the target, 19 cents, we were negative 2 cents. And fundamentally, everything went perfect. In fact, it was the best quarter of the year last year. We had a big growth of 150,000 ounces. We did 160,000 ounces, lowest cost we'd ever had. Some of the best grades we'd ever seen, yet we've got plummeted. And that's where we're sitting here today. In fact, when we talk about revenue, our Q2 production for now, Frank, is going to be the strongest we've ever had since the company began. So we're looking to produce about 70 to 75,000 ounces, almost $80 million of revenue. That's double what we did in revenue in Q1 of this year. And that's a function of timing because we couldn't get the ore through the mill. But again, when we see all this come through the mill, in the end of Q2, we're going to have the best $80+ million in one quarter. That's pretty phenomenal for a small company, a junior company that's growing up here. What was the other thing we had talked about yesterday? Those two.
Your revenue per share is growing.
My free cash flow, sorry.
And your free cash flow.
Yeah, so our free cash flow is something we decide, and it doesn't change with US GAAP or IFRS. Good point, actually. We had planned to generate $10 million of free cash flow this year, and we're going to stick to that. What we're doing is because we're ramping up 2 mines, we're putting the True North project up this year and Hollister. So 2 mines as we're building, and we're still generating $10 million of free cash flow as we're developing and putting them into production. So by Q4 of this year, those 2 operations are going to be adding to the balance sheet of Midas and Fire Creek. So that gets us to the 225. So it's a rapid growth, generating free cash flow while we're putting 2 mines into production. So that's what I was talking.
Good. Have you had any issues with accounting, Michael, cross-border?
Not so much cross-border, but I do feel the pain that you have when it comes to earnings per share, because under IFRS, we found a very odd situation with our old commodity-linked notes that we would have to mark them to market. And as the notes were becoming less valuable for holders, they were representing gains on our accounting numbers. So we were looking wildly profitable as our debt was actually diminishing in value to the holder. And yet from the company standpoint, that's not what I would pay. So we found we had to go to adjusted earnings, like many people do, to back out all this stuff. And regulators don't really like you going to adjusted anything because that's not the basis of GAAP. So accounting can provide strange perspective because I think in some cases it's meant to be from an investor standpoint, but not necessarily from the corporate standpoint.
Good. And yourself, Ian?
Sure. Well, not right now, not only going from a developer to a producer, which is obviously very different accounting, we switched from Canadian to US functional and reporting currency, because when you're in a Canadian currency in our business, everything's in US dollars, our debt's in US dollars, our revenue's in US dollars. So we're getting wild, unrealized foreign exchange gains that were irrelevant to our business.
I couldn't hear you. I don't think you could hear
Sorry.
me.
We switched from a Canadian functional and reporting currency to a US functional and reporting currency because our debt, our revenue, our costs were all in US dollars, so it made sense. And when you have your reporting and functional currency in Canadian dollars, it was giving wild unrealized foreign exchange gains, which made no sense. So now everything is in US dollars.
So what do you think, after we get through getting a new group of shareholders, Paul, what's your big vision for the next 2 years?
Yeah, so the plan's going to be pretty consistent with getting these other 2 mines up and then continuing to grow from that platform. We have a tremendous amount of exploration. We've just consolidated those 3 mines in Nevada. We own 103 square miles of prime land in the middle of northern Nevada. Not a lot of people can say they've consolidated something like this. In fact, people have been trying to consolidate this for 20 plus years. When I think of when we first began Klondex, so already know I'm from Timmins. I have a wife and 6 kids because there's a lot of cold nights.
In Timmins?
Yeah, that's right. Wife and 6 kids. My wife and I together, we took 80% of our worth and put it into this company. 80%, not 10%, not 30%. We put 80% of everything we own into Klondex, and we've still held it. I think I heard Rick Rill talking about it earlier. Stock options have an expiration date, so we sell those off. But as far as the stock itself, we've never sold one share of Klondex, and we still own 80% of our worth into this one company. So that's pretty high risk, but we were betting on ourselves. And when you're betting on high quality assets, we had a good mixture and a good recipe there.
Good. And Michael, what's your vision now that you've got it turned around? You have these gold notes. What's your vision for the company? Is it just growth, or to be, if we talked about it briefly, like a private equity firm?
Yeah, no, I think the comments made earlier, it's going to be about taking debt off the table as we go forward, so turning our production into cash and cash into taking the debt off the table so that we actually increase the value of our resources, our production, and our assets on a per share basis as we move forward. So we're out with the excess cash we're generating, and we're buying our 2020 notes back in the market, because for every $1,000 I buy back right now, I'm going to save about $160 of interest over the next couple of years. I'm buying them at a discount, so again, I'm taking that off. I'm deleveraging the debt side of our balance sheet to improve the equity return to holders. And we'll continue to use our focus right now on our Segovia asset. It's the one that's producing. In this market right now, cash is king. So we'll continue to focus there and wait and see what happens with a gold rally that gets us to an opportunity then to look at Marmato. Yeah.
And so the concept is, by buying back your bonds, they're convertible. So therefore, you automatically have embedded shareholder contraction, like Buffett likes, buy back your stock.
Yep.
I showed you all a chart yesterday that you buy that ETF that's just buying back their stock. You take the S&P and you just focus, and it's far outperformed the S&P 500. And so the idea that you can increase your value per share by just deleverage your balance sheet, and for every $1 million they buy back, it's $80,000 of saved income. At the same time, this future dilution just starts shrinking rapidly.
Yeah, no, that's exactly the point.
Okay. And Ian, when will you be able to announce that you're through your testing, your teething stages of production?
Well, this will be the first quarter. So we should have our first quarter results will be out mid-August and press released. But it's not just that. As well as this one share zone at Santa Rosa, we have 100 square kilometers there, which we've consolidated with multiple share zones. And we have a plant that can do 1,250 tons per day right now, and it can ramp up to 2,000 tons per day. So when we do put additional share zones into production, we already have the capability in our plant. And in addition to consolidating Santa Rosa, we've already consolidated the entire Vedas district, which is parallel to the California district where Ventana was, and bought all of the existing mines in the California district that Ventana didn't consolidate. So we already have our pipeline project, which we're working towards our first resource on as well.
So you have lots of opportunity for organic growth.
Exactly.
Good. Now, what about the risks in Colombia? Always these cockroaches come out of nowhere that steal your high-grade gold. They seem to burrow through. You hear about these stories. I know you've had some issues, Mike, chasing these illegal workers off your properties. And have you had those issues too, Ian?
No, Santa Rosa, it was one of the reasons we were attracted to Santa Rosa. It had, when we were looking, it needed to have the geological potential for the scale we wanted. We wanted it on infrastructure. It's right off the Pan American Highway. It's got hydropower, all of those things, but also artisanals. It had minimal artisanal work currently on it. It peaked in around the 1940s, and just on our initial concessions, which are now grown to the whole district, but we mapped 3,000 adits. So at one point in the early 1900s, it was covered in artisanals, and they mined out all of the oxides in the saprolite, but they never touched the sulfide. So anything below 20 meters is what's left for us to mine, and they're not there any longer, so we don't have an issue.
What is your average grade?
In our feasibility study, and it was 5.2 grams, but with our infill drilling we've done since then, and some of it varies. So it's still, what we've mined so far has been above 5.2, but some of the stopes have been double digits.
And Michael, your grades?
Resource grade average is 11. We're currently mining an average of about 14.
And what's the average grade in the world for a gold producer? Do you know this?
No, I don't know what it'd be in the world, no, but I know what our average grade is.
It's
our average grade, our reserve is actually north of 40 gram, and we're mining about 25 to 30 gram into the mill from Fire Creek.
I believe it's less than 2 grams. We have the next panel is going to have the gold analyst, and we can get the exact explicit numbers. So these 3 operations have substantially higher grade. And when you look at as a quant person, if you're looking at these spaces, you look at high gross margins. And the higher the gross profit margin of any industry, the less volatility of its cash flow, especially free cash flow. So when you say, okay, how do I apply that for a consumer products company over to the gold mining industry, it's high grade. It's high grade, it's high grade, it's high grade, it's high margin, and it lowers your risk. So even if you're going into high-risk countries, once you get that big grade, you can mitigate a lot of that. The only problem is that in Colombia is they had all these illegal workers, and in particular was Gran Colombia. You had big issues with there, Michael.
Yeah, and
How many did you have to explain to people that now you've got it under control?
we've got over 2,500 artisanal miners under contract with 44 different contracts at the moment. And and contrary to the press, we are not in the middle of a lawsuit against the government of Colombia. We are in discussion with the illegal miner groups right now as part of a roundtable process. We're focused right now on the largest of the illegal mines that's in our territory, and that we expect to successfully wrap up discussions with and bring them under our contract mining model, which essentially allows them to mine the ore, but instead of taking it to illegal mills that use mercury, they bring it to our mill doorstep. We pay a fair price for it, we mill it, we process it, sell it, and make a profit on it. And we've found that model has really worked well for us in the community because it's a historic mining community that's been around for 150 years, and mining is the way of life. And so by giving them an opportunity to still mine and sell at a fair price, we socialize the situation with the illegals.
Great. So this is your buying opportunity, and it's buying. I guess what I like to say, there's volatility when there's great fundamentals, you come out ahead. I want to thank everyone, and what's important here is that you're sort of a ground floor. You're dealing with executives that have had so many headwinds and adversity, and it just segues perfectly with Rick Rule's talking about great CEOs and CFOs and what they do to create fabulous companies. Thank you all. Thank you, gentlemen.
Yeah.